talking about ethics and regulations. How you doing today, Zephi?
Doing pretty well. How are you?
Oh, doing good, doing good. Just seeing about all these regulations coming down the pipeline, and
Yeah, doing pretty well till the research for this episode started.
right. I mean, there was a couple of big announcements just last week, and obviously there was new developments this week with SEC is going after the guy from Hex and Pulse.
I did
Yeah,
not hear that.
and I hear they're going to prosecute Binance. So they haven't done it yet, but they're talking about it. So, lots to talk about, and I guess let's just get straight into it, man.
All right. Well, gosh, where should we start? Let's start with the ethics. We've seen
let's
obviously
start inside the crypto space.
I like that. So here we are. It's 2023, late 2023. We've seen a couple of years now of pretty much relentless greed situations screwing everybody at the same time. We've seen a lot of unethical behavior, trading behaviors, mixing of customers' funds and trading funds, just things that are not ethical, but may have been common or may be common in the traditional finance space. These things are what have led to this incredible downfall over the last couple of years in price and projects and trust, frankly. People's trust in the industry has been shaken by the lack of ethics. So, what do we see? We see the people who are still here demanding regulation, demanding help, demanding some protection in this space. We don't necessarily know specifically what we want. The crypto space originally was like anti-regulation. It was supposed to be the response to regulation, this kind of unregulated Wild West space. But now we're in a situation where we've got a lot of these big institutions who are pivotal to the space. They're infrastructure organizations like Coinbase, on and off ramps, things like that really should have some sort of regulation to keep the space healthy, to keep it, churning. So I don't know. What are some of the things that you've seen people calling for regulation specifically recently, since all these collapses have happened? Are there things that you've seen people going, we really need blank?
Honestly, no, not necessarily. I've definitely seen it from the Coinbase side, because I can see how for Coinbase, they want to be the on-ramp to this new world. Then that's what Brian Armstrong has said, is he wants to be the on-ramp to this new financial system. And in order to do that, he has to touch planet Earth. He's got to touch the government. He's got to touch the regulatory system. And so they, more than anything, want clarity, especially in regards to what's a security and what's not a security, because that's something they've spent a lot of time with what they list and don't list. And it's one reason they have been pretty stringent on what they list in previous years, maybe not as much anymore. Some people say that they've definitely opened up the floodgates a lot more than they have, but they definitely have they have a stronger vetting process for coins that they put on there than, say, Uniswap, where Uniswap is just like, oh,
anybody with liquidity,
you can trade it. And that's the thing of being sufficiently decentralized. And where it comes into individuals, this is where it gets weird with the regulation, is because individuals are choosing to ape into things that are shady because they, fall for it, and SEC wants to protect you, supposedly.
There's also some of that, there's people who see the risk and take that chance anyway because the potential reward is so high. And isn't the whole
point of this is individual sovereignty is also individual responsibility. So to ape into things that can be risky and then to later say, oh, I got wrecked, I need regulation to fix this, it's kind of like it's anti-crypto in a lot of ways because it's anti-sovereignty.
It's anti-responsibility.
Responsibility.
Yeah. If
Like,
you would have aped into Pepe and Pepe went off and then you sold out when you got rich, like you're not going to call for the regulation in the same way, but it's the exact same situation.
no, you're
You
not. In
got
fact, you're
rich
going to get mad that you got to
off of
pay the
somebody else.
taxes.
Bingo.
You're going to get mad you got to pay taxes on all your Pepe gains. Meanwhile, that's regulation. That's what regulation wants, is to tax you, and it wants to make sure it's getting its little like fingers in the pie. And the reason I said protect investors so tongue in cheek is because like there are many things that get through the SEC that don't help investors at all. And more than anything, the requirement to purchase a security is that you have $1 million in assets, not
That's what makes
including
you
the home
qualified.
you live in.
Yeah, that's all it takes to be qualified is just have a pile of money. You don't
Yeah,
have to
if you have
know how
$1
to
million,
trade. You don't
you
have to
can,
have any sort of risk management expertise or advantage. Just have $1 million. You're good to go.
right.
Okay.
Yeah, so it is kind of a facade of protection. And more than anything, it just keeps poor investors, or not poor, but under $1 million investors, from being able to access the same financial products.
Exactly. Well, the system. Bear with me while I put my tinfoil hat on. The system is designed as it is for the top to extract from the bottom. And there has to be that barrier there, or else maybe some of the bottom might climb to the top. And well, we can't have that.
Right.
That's our current system. You know what I mean? Not ideal.
Yeah, and another like kind of like way to look at it too is even having that $1 million safety net, like being over $1 million, just means you have more to lose. You're not
Yeah.
actually being protected
When you
from
lose,
losses in any way.
there it is. It's just less of an impact. When you lose, it won't put you out of your house to the point where the government has to step in and put you into government subsidized housing.
Right. So you're allowed to gamble at the big boy table. Doesn't mean you're going to win. It just means that you're allowed in the table. Yeah, it's interesting because, yeah, you can still, all the people that like, got wrecked in 2008 and Bernie Madoff and every other scam. So a lot of ways, like crypto wants to have things like Coinbase, Celsius, and Voyager, and anything that's touching the earth, anything that's touching meat space, anything that's touching dollars, like literally touching dollars, needs to have some regulation on it because, and I say dollars specifically, not stable coins, because that's a whole nother ballgame. But anything touching dollars is a point where like had Celsius had better regulation, had Voyager had better regulation, like would we not have gotten wrecked in those things? Like would somebody have spotted it earlier? And like that's one of those things where it totally is on the responsibility of people like myself who were in those situations. Obviously I trusted those organizations more than I should have. And why did I trust them? Well, Voyager, for one, was trading on the stock market. So it got a stock on the stock market. So why wouldn't you take that as kind of a sign of some kind of trust? It made it through the SEC, right? At least this part of it did.
Right.
And so, and that's something that's not really talked about is like some of these are publicly traded companies, Coinbase, they're going after Coinbase now. And it's like, well, why did you give them permission to list on the stock market if you think they're doing something illegal?
Just to follow through and say, but actually, yeah,
right.
That's not the way to do it.
So it's double talk. And so like the reason we need these regulations, as you said, is because there's a lot of people in the crypto space not being ethical in the first place. There's people using it as a way to defraud investors and as a way to get
dodge
people
taxes,
and then
whatever.
Those same people can say the same thing I just said, where, well, it's your personal responsibility to not get involved in these things and like to know the risks. You're absolutely right, but it doesn't make your non-ethical behavior okay. And that is where regulation steps in, is basically if the crypto community can't self-regulate and won't self-regulate, then nation states will be forced to step in and do something about it. And
Exactly.
that's going to get ugly. And then at that point, if you're not sufficiently decentralized, then you will be regulated.
Yeah. If you are capable of being regulated, you will be regulated. And they're
Right.
going to try as hard as they can to lump as many projects, protocols, as many things in the crypto space as possible into TradFi so that they can regulate it. Especially when you get into like these global regulatory bodies. We've heard so much about the SEC lately. We've heard all the Gary Gensler nonsense. We've heard all the bad rulings. Frankly, I'm kind of tired of hearing about the SEC. But when I look at what the SEC is doing versus what global regulatory bodies are doing, SEC's like baby time frolics right now. The
Yeah, and I
global
mean,
stuff coming down the pike is concerning.
it's not even just the SEC though. It is also
Right.
Congress. There are, there's positive and negative things coming out of Congress. It's coming from all over the place. And what I'm really afraid of in the upcoming presidential election in the U.S. is that this is going to be a bipartisan issue. Crypto is suddenly going to be left versus right. It's already forming battle lines, and it's scary because, in my opinion, crypto is a nonpartisan thing, and it gives like anyone a chance to build in a very equal way. I understand, like, it not in an equitable way, in an equal way. And that means that whether you're on the left or the right or whatever your politics are, you can be an anarchist, a communist, a libertarian, a Republican, or a Democrat, and it will serve you the same way, and it will help you the same way. And to make it a partisan thing is literally, in my opinion, a kind of defrauding investors in a
Just
political
games.
way. You're basically just going to
Political
make an
games.
entire political group of people not use this product, which could set them free, because it's going to set them free. And if we divide people, then it's a way of keeping at least half of them out.
That's our current strategy for everything right now. So why not crypto, right?
Right. And so for me, like, I'm here because I feel like crypto does represent my values and gives me the ability to better represent and do things about my values in the real world and financially and with my own sovereignty. And it's going to be sad to see like this turn into a political battle. And
it is already happening, though. We've seen like what Kennedy has said. He wants to abolish, what was it, capital gains taxes on Bitcoin to fiat conversions, and he wants to back the US dollar with Bitcoin. We just the other day saw Ron DeSantis come out. Bold moves. Ron DeSantis came out and said, I'm going to reverse this crackdown on crypto. I didn't hear any specifics, but now that's a talking point for him as well. And now we're on both sides of the aisle. Crypto is going to play a role in this next election in the US. And I don't know, the more nonsense and the more garbage that I see.
Yeah.
I'm leaning single issue voter at this point.
So man, we'll see
how it goes.
Oh my God. I'm not even going to get into that, man.
I know, right? I just shouldn't even say anything.
But the other thing is that this presidential election and this crypto regulation going on in the US is going to distract us from what you're about to bring up. And that is like the broader global, the G20, and what's about to happen on crypto regulation everywhere. Yes. And that's going to be a lot more permanent and prevailing on our everyday lives than anything that the U.S. is throwing out as clickbait.
Correct. We hear a lot about the SEC. We hear a lot about Congress here in the U.S., but there are global regulatory bodies that are making these decisions that will apply to everyone. They're cross-border global regulations that they're coming up with that will be imposed on all G20 countries by the end of 2024. Like, they've already said all of this. This isn't tinfoil hat stuff. This is the Financial Stability Board. This is the Bank of International Settlements, the Financial Action Task Force. They've all gotten together, and of course, so have some stablecoin issuers and other countries. None of them like crypto. They're all coordinating on anti-crypto regulation under this focus of same risk, same regulation. They do not want to create a separate customized regulatory body for the crypto space. They want to jam all of crypto into TradFi so that they can continue all of the things that they can regulate and control in TradFi, but just in the crypto space as well.
Yeah,
That's
and
where that sufficiently decentralized piece is going to play a huge role.
that's true. But I also think it's kind of it's a very weird thing what's going to happen with that, because on one hand, like you were saying in the beginning, like this technology was made to kind of break the system. It was like, hey,
Right.
what you did in 2008 was messed up. We see what is happening with fiat currencies all over the planet, and we've got a solution, and it's a people's
we don't
solution.
want a part of it. Here's an alternative.
And the reality is that crypto is a bottoms up movement, and it's hard to stop basically a renaissance. Like crypto and what crypto enables, with not just, I mean, it's the first time, like we've seen this disruption with the internet and what it's done with social media, but all of that is still owned by centralized entities and corporations at this point. Whereas crypto is the first thing we've ever seen where it's going to disrupt finance, but it's also giving it to people more than it's giving it to organizations in a lot of cases. Like you as an individual are able to stack up your own individual bags, and you don't have to do anything with it, meaning you don't have to put it in Aave, you don't have to put it in Maker, you don't have to stake it, you don't have to do anything with it if you don't want. You can put it in cold storage and just sit on it for whatever you're planning for it in the future, whether it be your retirement or you think there's some doomsday thing coming or whatever it might be. But the ability to have financial assets, and now with non-fungible tokens, the ability to have just digital assets with provenance and ownership, and not and going into an age where we're going to have more AI, we're going to have like more disinformation, and basically it's going to become more and more a technical age, and whatever you don't own, someone else owns,
Yeah.
and you're in public private property, so to speak. And so I think that we're going to see a lot of regulation on those things. But when you try to jam crypto into the traditional system, when it's here to break it, like when it's here to disrupt it, when that's literally its job, is to try and like say like, oh, we can make this work, when it's not. Like inevitably it has to fail if crypto's right. Inevitably something like Bitcoin and or Ethereum will prevail as better currencies, and
Yeah.
individuals as well as countries will be able to get into it equally, in a sense. And in a lot of ways, individuals have already profited more on it than nations ever will, because by the time nations get into it, it's going to be whatever market cap. They're already buying expensive Bitcoins.
Right.
So the regulation in a lot of ways is a band-aid that is inevitably not going to heal what they're trying to heal. And
maybe in the short term, they might get a few years where they've got control over things, and whatever rules they've set up to impose on everyone else gives them enough power to shift some cups around. But like you said, crypto being a bottom-up movement is going to adapt. Here we go. This is the pest-host relationship again. You're going to get a swing of overregulation, and then you're going to get developers and individuals going, we're going to move to ZK and decentralize everything. And now you've just opted out of whatever their new model is. As soon as they define a model and define limits and define you just code around it.
You know what? You're right about that, but I'm just realizing this for the first time, in a sense. Like, we always talk about sufficiently decentralized as like the code, the front end, the devs themselves, like things can't be able to be touched by a regulatory body. The real big breaking point of sufficient decentralization for all of these technologies is individual users.
And infrastructure.
Right, the infrastructure for sure. We always talk about the infrastructure, though. What I'm saying is it's not actually truly decentralized until so many people are doing it that the government can't possibly prosecute us all. And that's kind of what we've seen with like internet piracy, for instance. Like it's what you've seen with like file sharing, for instance. They have created like there are business models like Netflix and Spotify that are more convenient than pirating. And that's actually a take I've seen on the writer's strike recently, is like streaming networks have forgotten that they're only slightly more convenient than pirating. And pirating is one of these things that like is sufficiently decentralized to the point that even though the FBI has written regulations about it, they can't actually enforce those regulations in any real way. They actually can only go after people that are big enough, that are actually uploading hundreds of terabytes of files a day, that actually have like a farm worth busting type of thing, because individual users aren't worth tracking down. They're not worth the money you put in. They're not worth what the money they're even making on the system. So the real way that we as crypto win this thing is also getting more users to come into this space and say, even if they're just like cold storage in their Bitcoin and their ETH, and that's all they ever do, that's enough. Because
you've opted in. Yeah.
Once you've opted in, then, you know, it's kind of like no matter how like much you hate the government, you love the Declaration of Independence, you know, or the US Constitution, because like you can be mad at the government, but I'm opted into the system. Like I kind of need that document to hold true. And where you're really the most mad at the government is where they don't hold true to that document. When you can look at the government and say, hey, that's not constitutional. That's not, you're violating my rights as an American, is the place where people get the most upset, because that's what I opted into. I didn't
opt
into all your other shit.
I don't want this bait and switch. Yeah.
But the funny thing is, you didn't opt into that either. You were born into it. And that's all a nationality is being born into a political system. And you mentally opt into it at some point, though. You mentally go, these are the rights I've been given. It's the bare minimum. Like, you've given me this. It's the protocol.
Yep.
So when people violate the protocol, whether you agree to it or not, it becomes part of, you know, a thing that can get you upset and get you, you know, part of doing something about things that are messed up. And so that's kind of like what Bitcoin and Ethereum allows, is like, hey, do you actually care about what's happening to our money and our political system? Because here's a way of doing something about it. Here's a way of actually putting your money where your mouth is, quite literally, and opting into a new digital nation state and a new way of life. System.
Yes.
And
there are countries around the world. It's a signal. There are countries around the world signaling to each other, like, hey, we also see this. Let's do this together. Right now, what we're seeing in this environment is a separation of the global north and the global south. The global north being like the fiat-locked US, Europe, you know, these traditional systems, keep doing it how we're doing it path. And the global south is going, maybe we make a new BRICS currency that's a crypto-based, you know, they're looking for ways to leapfrog what we have, not just improve upon it, but like in the same way that Africa went from no internet, no telephones, straight to mobile phones and internet.
Right.
The global south's going to go straight from fiat to skip crypto for everybody.
Or like straight from no banks to cryptocurrency.
Bank on your phone. Yes. Instant bank in everybody's pocket. Huge transformations. And having populations on the globe that are split in such a way using two different systems is really going to show the restrictions of one and the freedoms of another. And I think that leapfrog, we're going to see the global south dominate in a way, almost in a speed that we could never think possible. It will be a pendulum swing that takes a day when it kicks in. We'll see how it goes. Regulation is a tricky space, and while I think we agree that we need some to certain extents, right? Would you agree with me on that case? We do need some regulation?
Yeah, I mean, you know, we haven't talked much about stable coins, but that's a good one right there. Is like, you definitely want to know that, like, if you're using a dollar coin, that somewhere there's a dollar backing that coin.
I need to be able to redeem
or
it.
at least you
Exactly.
want to know that there is hard assets, or you want to know what those assets are. So in the case of, USDC, they claim that there's a dollar for every USDC. Okay, bold. That's a bold claim. If it's true,
Yep.
it's true. If it's not, then I need to know what assets there are backing it. You have to be somewhat transparent, and I think that's been a lot of the Tether FUD, because USDT is not backed dollar to dollar. There are other assets backing it, but they're
Correct.
not telling us exactly what the weighting of those other assets are. So you're very much just trusting that at every moment Tether has enough assets to back every dollar that's on the Tether network.
Right.
And
And
so
a couple things there. The tether backing is they back it with cash and cash equivalents, which includes corporate debt and government debt.
right.
And right now, most of Tether's backing is U.S. government debt.
Oh, we know
So
they're
it's
never
almost
paying
an
that.
anchor. It's almost like anchoring the stablecoin system into the U.S. fiat system in a way. There's
Yeah.
almost this like mesh through stablecoins. But the other
In
thing
a way,
about
stablecoins are already
USDC,
doing that.
for sure. And the thing,
You're already
one thing I
claiming to
wanted to
be a
touch
dollar.
on exactly. I just wanted to touch on USDC real quick and what you mentioned about how they claim to have $1 for every one USDC, where you can interchange at any time. Assuming that's true, assuming that's the case, and they're actually holding dollars and not debt, that is already a huge step up over our existing fractional reserve banking system, where one, you can put in $100 to your bank, and your bank is allowed to lend out 90 of those dollars as soon as you step outside.
That's actually why I'm not really I'm not really bearish on Tether at all, because I'm like, well, do you realize if Tether has 50% dollars, they're doing better than my bank.
Boom. Exactly. Exactly.
If they've got anything over 10% dollars, they're doing better than my
Safer than the
bank.
bank. Yep. That's terrifying. I mean, it's good that we have it. It's
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 so
reassuring
funny
that it's
though.
available, but like, holy crap, our
I
system is
guess it is.
broken.
It's a really funny space where you can see like more or less the same person FUD Tether and then ape into like Pepe or some other meme coin and be like, like bearish on Tether, bullish on meme coin. And it's almost like on an individual basis, ethics are very sketchy in the crypto space. And it is very like, but at the same time, like, there's a lot of anarchy to it in that sense, and it's a freedom that we've never known in our entire human existence, because this is literally the first time in human existence that individuals, that commercial as they call us, has access to real financial products and the ability to do these things. Like the fact that you can spin up a meme coin and rug $1 million is something that you've almost never had the ability to do as like a poor person in some
Right.
off the beaten path country that no one knows about. You can do this thing, and I'm not saying that you should. That's where the ethics come into it, is like when you're in the Wild West, people are going to do things they shouldn't do. And
But the capability is there. So
right.
like, yeah, we've got Pepe, whatever, maybe it's just a garbage coin. But this ability now for anyone anywhere in the world to start, maybe my community is hungry coin. They can create an initiative that isn't just some Pepe or some trash or some intentional rug, and they can generate that amount of funds in a short period of time to really make a difference in something that's important.
Right.
So while you still have the ability of some jerk in the middle of nowhere deciding to rug you using this technology for $1 million, you might have an altruistic person in the middle of somewhere trying to use the exact same technology in almost the exact same way for good.
Right. And that's where the regulation gets scary, because of course they're going to go after the scammers, the people who are obviously ill-intended, but they're going to use it to go after people that don't have ill intent,
And the
because
protocols and the tools. It will be
they
an
want to keep
overreach.
the status quo as it is. They don't want this financial disruption. They don't want an individual in, a poor state in the middle of nowhere, a poor town that barely has access to the internet, to suddenly become meme coin rich.
You're not supposed to have that money. We kept you poor for a reason, and you're going against what we had set up. So time for you to not.
We're trying to protect you, sir.
Right? Yeah, I'm trying to serve and protect.
I'm trying to protect you from any gains you might experience.
That's right. That's right. In case success or freedom are on the horizon, we're here to make sure you're safe.
Right. So, I mean, the ethics thing is very individual. I think that there's a lot that can be said about that because it's also, we're in a global financial system now, and the ethics and the morals of one country are not the ethics and morals of another country. And so we're also entering into like a whole new, almost philosophical paradigm here of like, how do you, and this is kind of almost a DAO question, but how do you interact with people from all over the world and come to some kind of an understanding without having to literally understand the culture of everyone you're dealing with? Because we're all anonymous. We're all JPEGs. We're all, it's hard to know who anyone is. And even if you can know who they are, you still only know a persona. Like
right, we're just a bunch of 0x randos.
Right. And like you can see my face right now, but like my internet presence is still only my internet presence. It doesn't give you any actual view into my life or my ethics, so to speak. You have to trust that the thing I'm posting is true. So, and you have to trust your ability to judge me as a person and any project founder as a person. And you have to, in a lot of ways, you have to feel like this thing I'm getting into still relies a lot on the people in it, even if it's just a community. And that's actually a huge thing, is like having a toxic community can really turn people off from the coin itself. Like having a community where you don't feel safe, where you're like, these people aren't value aligned. That's something we talk a lot about. So it's hard to have self-regulation. And obviously, like we count on protocol regulation, but governance is a huge part of that. And if any protocol can be changed by governance, then we're always open to crypto culture deciding. And that's really what it comes down to, is the big like misunderstanding of crypto is that it's all permissionless, trustless technologies. It's like, no, it's still social. Like the layer zero is the reality of it all. Like the people that create the network, that run the nodes, that are in the community, that hold the coins, are still
that use the network,
that tweet about it or X about it or whatever, like whatever was. But yeah, the people who write posts and blog posts and talk about crypto are crypto. That is just as important as the financial implications of the market cap and all the other crap as well. Like, right. So regulation is going to touch us where it can touch us, and it's where it becomes sufficiently decentralized is very much up to the individuals to like be safe and secure in your funds and the things that you're going to do. And a lot of that is the social layer of understanding what you're truly getting into and understanding the values that you want to be a part of. And because anything that can be regulated will be regulated, and anything that doesn't get regulated requires self-regulation. And that's on the part of the founders. It's on the part of the investors. It's on the part of every user
if you want to participate,
connect their wallet to a website.
Exactly. If you agree to participate in this system, it's up to you to use it responsibly, right? Use it respectfully, use it responsibly. This is a tool everyone's using. We all have to agree to that, or we're all going to lose.
Right. And obviously there's more infrastructure being built around like better wallet recovery and social recovery of funds that may get stolen, and NFTs and things like that. And that's all awesome. That's all stuff we want to see come in. And that's a part of self-regulation, is the industry building tools that actually allow us to help each other and not have to say, well, sorry, you clicked the wrong link and you got mugged, and nothing we can do for you.
You can't have two options where it's self-custody and you're on your own, and Coinbase and you get nothing.
Right.
There has to be a medium in there, and I think that's a lot of the UI upgrades and UX upgrades that are happening right now.
Yep.
regardless of what happens, we're going to see a very interesting next few years globally in the crypto space. I think, we're all excited. We're gearing up for this next bull run, but there are so many changes and so many technologies on the horizon right now. Not just in the crypto space. We're talking AI. We're talking just network connections, 5G, the things that are happening all at once. It's just going to be
Yeah,
a
I mean,
wild few years.
that's
Guaranteed.
actually so like we've been talking a lot about crypto regulation as far as like how to regulate crypto. And I think one thing that we don't think about when it is important is one way we don't want to be overregulated as individual users, and we don't want Ethereum and Bitcoin overregulated or every little meme coin. Like we don't want nobody's able to now make music NFTs because they're all securities. We don't want that. But another thing is that if we want to see things like medical records move to ZK, if we want to see things like under collateralized lending come to crypto, if we want to see insurance
Property
come to
rights,
crypto,
property management.
all of that stuff. And the thing is, this goes that other direction now where I don't want to see the corrupt insurance companies and mortgage lending rates and all the things that exist in meat space come on chain. I want those things to be fixed when they come on chain. I want the transparency of on chain to provide the safety that we don't get right now in those spaces, because even though they're regulated, they're still not safe for us tiny users. For us people
Right.
who aren't millionaires, then like we're not doing very well when it comes to healthcare and insurance and flood insurance and housing insurance. And all of these things don't bode well for us. Car insurance, none of it bodes well for us. Like, so when those things come on chain inevitably, we want them to be fixed. That's the point of putting them on chain, is to make them
Yeah, the rails don't fix it. You have to have a fixed system on the rails. That's
So
the goal.
that is the beauty of thinking about crypto in its own regulatory environment, is if we see crypto start to become more acceptable, then we see more traditional things come on it. And then we don't see the ability to rug your consumer the way that they do now with insurance. It's like, no, these are the terms you agreed to. And it's going to be a lot harder, hopefully a lot harder, for the protocol to say we're not paying your insurance claim because XYZ. It's like, no, I fulfilled the obligations. Blockchains connect automatically once you fulfill the obligations. Boom. Like that's the settlement, where settlement assurances is what we don't have in insurance right now. And that's what crypto provides us, is settlement assurances. We want to know that I've paid into insurance for X amount of years and that I'm going to get something out of it when something happens. And that's
Smart
not
contracts.
the case right now. So
Doable with smart contracts.
So we've gone all over the spectrum with this, and I think it's been a really great episode.
Yeah.
Do we have any closing points we want to get into? Any big things we haven't touched on?
We could have had a whole episode on stablecoin regulation specifically, but yeah, I think we covered a lot of important things. What it really comes down to is, like we said, personal ethics, personal responsibility, and moving the industry toward what we really want. Even in the face of maybe regulations that we don't want. It's all up to us to make sure that we're doing the best that we can for this space, putting what we can into our tools and developing new protocols and whatever else it is that we can do to improve the systems that we have and work toward a fully decentralized system that can't be regulated by any one individual or institution. Those have to be our goals.
Oh yeah, I can get behind that and agree with that. And we're definitely going to see how it develops over the next few years. And definitely, like I said, there's a lot on the table right now. Everything is so bipartisan that it's almost like we were saying before, it's kind of hard to fret about the U.S. regulation. You can really look at that global regulation. That's what's going to affect us more than anything. That's going to be the big tell. So, all right, well, it's been a great episode, and I'll see you again. What are we doing next week? What are we doing for the next one?
Oh gosh, that might be our recap. Let's see.
No, the paradox. We're at the paradox. So the paradox is basically, here we are in crypto, talking about on chain. talking about life on chain. And meanwhile, we're on YouTube, we're on Twitch, we're on X,
Restream.
we're
We're using all of these
we're
centralized
using
Web
all
two
the
tools.
centralized things. Like how much of us are depending on AWS to keep the lights on, and Google, and is your DAO a Google Excel sheet?
That's the exact type. Like that's the transitionary phase
Wait,
we're in. So
let me get this straight. Your DAO is a Dash page, a Notion page, and a Google spreadsheet. Gotcha. Sufficiently
1,000 Google
decentralized.
spreadsheets. Yeah. So
um,
that's where we're at. But that paradox, that's going to be a fun episode.
yep.
Just,
So,
we know where we want to go, but we're struggling with the tools we've got. Stay
all
tuned.
right.
Stay
Well,
tuned.
see you soon, friends.